Okay, hi there, guys. G'day, Pete. G'day, Bobby. Hope we're doing well. Well as could be, considering today. Heidi, how are you? No, not a very nice day for the ASX. It's nothing worse than the weekend when you wake up Saturday morning and you check out what happened overnight. Yeah, okay, here we go. Hey, Henry. Yeah, so it's a lot of gives us a lot to think about over the weekend. So rather than go over any sort of specific topic today, what we'll do is just we'll run over um, the markets as a whole. So we'll just have to reflect. So there's been a few levels, obviously the US that are broken. You got the two major indices I'd look at anyways, the Dow and the S&P, the broader market on the S&P. The S&P still looks quite a bit different to the actual the Dow. So we'll go through those charts, have a look at the ASX. I don't know if anyone's following us. I did put out a tweet today, an alert on the ASX 200, which I'm bearish on it. I didn't think it would drop as low today. So we'll go over what I'm looking at there. Just a general market overview, probably look at some gold. If there's anything else you want to look at that's sort of macro, can push the markets around, well, with a macro view, say gold, the Aussie dollar, we'll take a look at those. I think that's all I can think of really, and then we'll just go into some stocks. So we'll give you a bit of an open forum to talk about some shares you're looking at, break down some shares. We got a bit of a mixed bag today. We've bumped up the number of shares we're holding, but a bit of a mixed bag, and it's probably because a lot of them are a bit thinner on the trade volume, and being days like today, they get a bit choppy, but they're still holding up. All in all, they're holding up very well, I'd say, considering the market. And got one short on that's going, it's dropped about $5 on Wally today, so we'll go over that. So yeah, just be wary. Probably after we'll do about 20 minutes of markets, and then we'll just get into the shares. All right. So thanks for joining me, guys. Anyone that's new, welcome to Trade Setup. You can join us on Twitter. At the top left-hand corner, you'll see our Twitter handle where my mouse is there. It was at trade_setup. That's where we put through the bulk of it. We do put through stuff on Facebook, but it's pretty much the same as what comes through on Twitter. And the bottom right, subscribe to us at YouTube. It's at Trade Setup capital AU. And you'll see a whole bunch of old videos there, everything like that. And anyone that is new, sorry about if the stream drops out a bit. And if it is fuzzy, you can go to the bottom right corner of the stream, hit on the spinning wheel, and just go to, was it quality? Put it to 720. If it is a bit fuzzy, that's just a YouTube setting. Yes, if it does drop out, I'm sorry about that. It's just my internet upload speed is rubbish at the moment, and I've been promised we've got NBN coming, so I'm getting flyers in the mail. So as soon as that comes on board, that should give me a lot quicker, not just the download speed, but the upload speed, which is important for streams, so I don't get any dropouts. And so far, it's been okay. So it's been hanging in there. Anyone doesn't know I run, and if anyone does know more about it, I've got a 4G modem, which I plug into and that's just the best internet we can get at the moment, but it's not much more than what I get through ADSL2. And about 5, yet you flick it on the phone, download through the same network, it gives me about 30 as opposed to 4 to 5. So don't like how they cap it, and I reckon if you rang them up, they wouldn't say they cap it. They do. It's pretty obvious. We're going through the same network, so interesting. Anyway, that'll be sorted out soon. Let's get into it, guys. Enough of my babbling, and let's just delete that. And I've got to change that, and I'll get into some markets. Minimize that. All right. So this is the Dow. We'll kick it off with the Dow. What's happening over there? Gino, how are you, mate? I know, Kevin. I've heard that, and it's going to frustrate me if I get some rubbish internet connection after going through NBN. God, I wish they could just fix it. 5G's coming soon anyway, so that might give them a boot in the pants. Hopefully, they just go through the bloody phone lines. Could be better. Anyway, so we've got the Dow here. Um, you can see the way I'm looking at the Dow. Let's just go. I'll put that on a bigger chart so we can get a bit better view of that. So that's the Dow on a daily. And the thing that's a concern is we've come up into a zone, and this is the top 30 stocks, don't forget, it's not the broader index. But what you can see is we're straight up into sort of this zone here. We touched on that, and it's not so much a full hard and fast. It's more that zone just above 26 to 26.2, thereabouts, a couple hundred points. You see on the initial push down, when the markets got caught off guard a bit, we had that little bounce, retested up towards around 26.2, taking out that higher low, and then pretty much fell away from there. This is as high as we can get after retesting these lows, and then pretty much fell away into Christmas. We've rebounded really strong. We really haven't seen any of this choppy price action over a number of days where we've got higher volatility. The volatility's been quite contained, and it's pressed all the way back up to that resistance zone where we're starting now. A couple of red candles there, and that's the most we got. We backed off from that 26,200. A couple of red days in a row, which drove the market lower to below, around that 25.2. So it's about 1,000 points there over a few days. And then we bounced. We're really at the moment, after that Friday's price action, it wasn't, before that was probably not too bad. We could have had higher low, that pressed up and off we go. But the Friday's price action, coupled that with, if you look at the actual action from start to finish, it pretty much sold off in the open, had a bit of a bounce, and then sold into the close. So that was a bit unusual for the Dow and the S&P to open weaker and not bounce back into the close. They have been doing that quite consistently, even if they finished down on the session. The actual action was a bit more positive into the close, whereas Friday night was a bit different, and a bit of a sell-off. So that candle there alone has triggered, for me, what I'm thinking is more of a lower high. So what we've pressed back up in 26.2, we've retested and failed at 2600 a few days ago. What was that? Thursday, Wednesday, Tuesday. Tuesday night we failed at that high, and we're potentially going to start accelerating, which obviously the next level here is 25,200 to get through 25,200, and then it'll be interesting to see if we get our two-legged move we talk about quite consistently, that move down, or whether we find this chops around here, holds some more lower highs, as in this leg down. We bounced up, whether we just chop around here and then completely capitulate and just can't break back up again, and you find that the pressures on the downside through those lower highs, then we take out that lower and really extend. Don't know. I'm not saying it's going to be like this kind of press lower, but we'll have to see. We'll have to see. So that's the Dow at the moment. For me, just after Friday's candle, it's starting to look a bit heavy. The price action is different, and we've got the bonds. I don't know if anyone follows the yield curve, and that's a precursor, potentially a precursor to recessions. And I think the key level, the yield, which is the important thing. So the yield comes down, the bonds go up. It's a flight to safety into the US dollar, into US dollar bonds, because nothing can come safer, even in the bank. Safety of the government, US government bonds are going to give you a return, even if it's minimal. You know that you've got as close to guaranteed as you can get. Never like to say guarantee, but that's the flight to safety into bonds. And you can see into the US dollar anyway. Gold didn't kick off that hard because the US dollar rallied, but there was a good sign. The fact that it was positive, it rallied $5 or $6, I think, on gold, and so that's people buying gold, even though the US dollar is going up. So the buying into gold is a bit harder than the US dollar rally, so it's offset those sort of, well, what could have been a -9 on gold, but that's again showing that sort of flight to safety, look at safe haven out of US equities. So really, the US is the only one really growing. Europe's struggling, and then looking at global growth. I think the ECB in Europe have mentioned, they're struggling over there. They're looking to potentially cut rates, whereas the US have gone from a rate rising pattern or cycle to on hold now for pretty much 2019. And maybe there's potential, if this market starts tipping over, they might have to cut rates just to try to stem the tide a bit. But we don't know. I mean, this is all hearsay, but to me, these sorts of things, you've got the bond market, which is a very, how do you say, professional. Um, if you were watching the bonds, I wasn't actually at the time, to be admittedly, but prior to the GFC, there's a big heads up that something was happening in the bond market, and they were reacting before the actual shares did. And the yield curve's been coming in, as in it's now inverted, meaning the 10-year yields is lower than the short dated, I think it's 3-year or 3 months or something like that. So short dated, yields are a bit higher, which you don't want to see. You want to see basically the 10 years, the yields are higher than the near or near dated yields, which means that interest rates are going up over that 10-year cycle. Instead, they're the opposite. And I think the yields in the tens are about 2.5, just a touch under. And I think they reckon, well, there's that thought that if they get down to 2.4%, then that's where the Fed might cut rates. So if that's the case, I mean, who knows how that's going to affect the overall market, because you don't cut rates, well, you only cut rates when the overall economy is starting to slow or needs a bit of a jump start. It's not a positive sign, even though it is there to try to buoy markets. The longer term view might be, hey, this is not so positive. All-time highs in the US, or just about, the all-time highs are right up here on the Dow anyway. We've had this big sell-off, big bounce back, potentially getting a bit heavy around here. You can see with this retest and then lower high, potentially a big sell-off. We don't know what's going to happen, and we just got to really plan ahead. This is my view on the Dow. Potentially, we're going to start to get heavy. We could go through that level. If we do, what's going to happen? And we'll go over the Aussie at the moment, which obviously we know what's happened to the Aussie today, ASX getting sold off, but got to plan ahead. What are we going to do with our stops on our positions? Probably tighten them up. We've got gold going good. We've got a short position going good. The others, we've taken some profit on, some that are going a bit crappy, but you've got to plan ahead. You've got to, what do we do? I mean, if on different positions, if you tighten up the stops and it was a positive market, or the share was going well, they shouldn't be really hitting the stops, or you should be putting them to a level where if they do get tagged, something's not right. So that's what we're always looking to do. And we're looking at this global action, price action, to see what's happening in the global market. Is obviously slowing. That's the biggest concern at the moment. And the bond yields are pointing towards that potential recession. So something to keep an eye on. If we go over to let's go over some more charts. What have we got here? What am I looking for? The S&P. The S&P is a slightly different story. Even though it got tagged as well on Friday night, this to me, I mean, you've got a deepened correction here, and this is your key anchor level, 27.25. This market is technically still in an uptrend. It's not changed, and we haven't got, as in the Dow, we've got that lower high coming into play. Let me just get that. This is what I'm thinking. If that's going to be a lower highs are very bearish, and you've got high lows obviously bullish. So that's looking bearish. Whether we chop around here, retest this low, or just chop around and hold, we could do this, we could roll over, or we could do something like this. We press down and just start to hold some high lows, and then bang, up we go. The market rallies, and then this is just holding it. So long-term sort of cup and handle, handle here, big cup, and it starts pressing into all-time highs. Could take a bit of time. So it's something just to keep an eye on. This is what I'm thinking, obviously with the Dow, but couple that with the broader market. We haven't got that lower high on the broader market. We've got, obviously it's sold off. It could sell off down to 27.75. What's another 25 points? And then start to get bought back up, hold that higher level above 27.25. If we do break this zone at 27.25, then I think it could start to get a bit heavy. But at the moment, it's not looking that way. And the key levels from, back in October, November, and, December, above 28, we're just testing from the top side now. So maybe that's a test, retest there, bang, up we go. We don't know. So this is, for me, nothing to get too bearish about just yet. And this is what's important if you are, I mean, I know it's just the US, but the US leads most markets around anyway. It's going to lead us around by the nose. So it's always important to see what they're doing, to just keep an eye on them, to get the global picture. And at the moment, this is not too bad. It's the Dow. Yeah, the Dow's looking a bit heavy, but like I said, it could hold up some higher lows. So we could come to that point of agreement. And once you get that higher lows and lower highs pressing in on each other, you really just got to see where it could go to. But this is showing slightly different picture. If we go to the DAX, where we got the DAX, here we go. The DAX, not so good. This is more or less your key level. Was that low of 11,400? Say we broke through that, finished below that, 40 points below that roughly on Friday night. So that's looking a bit, but you can see before it does a similar thing, presses through, cleans it out, bang, up we go. So this could be more from your weekly chart, a higher low, a nice high low zone. Does that make sense? We could be coming into that zone. You need more price action. If we pop back up and build a lower high and start to confirm a lower high, then I'll be a bit more bearish on the DAX and the FTSE. The FTSE, been going up since what, start of 2019, not start of this year. What am I talking about? Start of this year, like most markets, and it's holding higher levels. Just this pullback here, it's going to spook investors, but don't forget the market always needs to suck in some traders, suck in some sellers to go higher. If it starts to get stretched and it's pushing high and it's running out of steam, you're going to get it going in a pullback mode. It's going to suck in some sellers, suck in some bears into the market, and potentially turn around and squeeze them back out. So this could be what's happening on the FTSE as well. They've got their Brexit issues. They're struggling. I don't know how they can keep pushing higher with what's going on, but we'll see. We'll see how it goes. So that's it. Let's look at the Nikkei just before we get onto the ASX. That's still, very much the same. We've had the pullback here to 21,000, starting to head higher, and the Nikkei, Hang Seng, the same. We've all been going up. If we go into where we're going, this is the Hang Seng. It's got through sort of not a key level, but 29,000. It's just pushed up through 29. Maybe this thing could just pull back, build a nice inside, a higher level here, and then up she goes again. We don't know. There's key levels right up towards 31,000, 31,500. These highs just in here, and then from there it's pretty much into the highs, the all-time highs. So yeah, let's get on to the ASX now. Any questions there, guys? 18 minutes. We'll just flick over the ASX. Actually, we'll flick over here. So it's the ASX for me. Let's just get that. Actually, let's go. I just want to go back first. You can see it's mainly the weekly. Let's start off on the weekly. The weekly here, the fact that there's a few things that got me concerned on the ASX, and I think we're really, the ASX is made up of a bunch of bears, if you ask me. We're always a lot more bearish than anywhere else. This high through, say, 62.20, so 25.30, what was that high? 35. So we pressed down, we pulled back up, and that was an initial sell-off, and we got smacked down, bit of a retracement, smacked down again just before Chrissy, before we started to rally. And even on the weekly, you've had these minor higher lows, minor higher level. This one's another minor level. If you go to the daily, that's probably where your key levels on your daily. So you don't like the fact that we've had that wash out of that 62.34, the previous highs anyway. We've washed it out, finished below on that week, and now potentially rolling over. But you also got to take into account that this market higher, how it's pressed higher into that resistance zone, it was going to struggle here, whether it was going to break through, pull back, touch it exactly, and then roll over, who knows. And at the moment we're in contractive mode, we're contracting off those highs. You can see a red candle here. Last week was a positive overall, not a great finish to the week. And then we're rolling over today. We're taking out that this inside level. We'll look at the daily in a second, but there's a couple of levels where it could fall short. And what I'm looking at here is if we got this leg up, okay, we'll draw that in blue actually. This is from the weekly. That's your leg up where we're looking at now. So we've got the leg up. What we're seeing at the moment potentially, and don't forget this is your anchor, all right? We could be just contracting, and what this is going to do is sucker in a few sellers again. There's going to be some sellers, and there's been some minor levels through 61.25. I think it's going to, which is somewhere around here. The way we are today, it could easily sucker in some sellers and turn around and squeeze them back out. We've just got to, what I'm trying to say is we've got this anchors level, which is down here, is sort of the key at 60.25. We could easily do these T legs lower, and boom, up we go. We get an inside level, and then up we go. We go through the all-time highs. There's no reason why we can't do that and just continue on this trend. The fact that we've come into sort of a key level and we're extended with this leg up is pretty much extended. You can see that on the weekly, it's starting to roll over. The buyers have pressed it from overbought down here up to oversold, right up into that level. We were getting oversold around here, blasted through, and just kept going up. So the next key level after sort of this highs were after 59.25 was really common sense for saying we're going to get up to that 62.25 zone. We've done that. We're backing off from there, but the way we back off is key. Whether we're going to see some further downside, a really serious sell-off, or whether we're just going to flush a few buyers out, a few of these late buyers in this zone above 60.25, that anchor, and then turn around and bounce straight back up again. So all we can do, what I'm trying to say is all we can do here is just piece together the price action as we see it. And you've got to look at your weekly charts. So what's happened on that? That potentially is still bullish. Whether we're going to see this price action or whether we're going to see chop around here, hold a major level, and then roll over. But when we roll over hard, you'll probably know it. It's just going to keep going for a few days. Whether that's the next couple of days, we don't know. So if we go back to the daily, you can see some of these key sort of inside levels. We've got 61. This low here, is this going to be a lower high? I don't like, if this is a lower high, I don't like the way it's formed. We did have a washout at 62 and we've pressed down. I don't like the fact that we've blasted through today. If I was going to trade this on the short side, obviously my weekly charts is going to be in the back of my mind for a press down to say 60, 50, thereabouts, but I want at least 100 points. So I wouldn't mind seeing from here if this pops back up over the next couple of days, sort of grinds up at 61.50 and we start to go lower, then maybe jump on the short side for a short trade, potentially down to 60.50. And if that keeps going and just blasts through support, yeah, then it's going to be a good one. But if it doesn't, we're not going to put too much risk on the trade. We just want to come off a lower high, below 62 basically. So at the moment, we still got this, let's just draw that up. The pressure is to the downside at the moment. It's just, you've got to assess which charts what you're looking at, where it could go to, and this is your level off the weekly where it's still holding that high low of your weekly, and you've got sort of down here and then so on. Then we got down here. So there's got a few levels to blast through. We can easily, if we tag this one, get through it. We could pop up, build a lower high, and continue down to 58.50. That way, your short trade could be very profitable. But if that weekly chart holds up and we just chop around, say from here we've sort of pressed up, we go down and we just do this kind of grindy action, then you're just going to be careful that weekly chart kicks in and we get that little cup and handle and then blast off through or potentially into new all-time highs. We don't know yet. We could be dependent on what's happening with China and the US, whereas the US is slowing. Look, you never quite know where Aussie dollar's going lower. So don't forget too, if the US is not raising rates, I know we've sort of bartered back and forward on this, the US dollar and the Aussie. It could be a flow into Aussie. You got low yields, potentially one way to go. We've got some good stocks, potentially. Could be a good flow of funds into the Aussie dollar, looking for that yield between the Aussie dollar. Not sure it's going to happen anytime soon. Anyway, we could cut rates on the Aussie, but it's probably factoring that in at the moment. But if there's any sort of good news coming out, economic news in Aussie, and we're looking to potentially talk of raising rates, the Aussie is going to appreciate. The US dollar not going to raise rates, or the US is not raising rates, and you get that differential between Aussie raising and potentially the US cutting. But this is all here, so we don't know what's going to go on just yet. There's a few things to think about either way. Alrighty, any questions there, guys? So at the moment, I've got this weekly chart in the back of my mind. We could press down here, and if I'm going to go short, which I am biased down because we've washed out, I just don't like that clear. What I was actually looking at was selling below that, that break of 62. What was it? That break of 61.25 or so. That break there, low 61.27. So you're selling at 61.25, which will only just be in by 4 points at the moment. But the fact that we washed out that high there, my stop has to be right up here. I'm not willing to have a big stop on that. So ideally for a short, I think today could just be a washout day. We're getting a bit extended on the downside on the daily. Wouldn't mind seeing this somewhere around that 50% mark. The market sort of presses down like we're going to sucker in a few shorts, turn around, squeeze them out, but hold a lower high, and then press down. I'm biased short for this market in the short term. Whether that turns in the longer term is yet to be seen just yet. And that's got more to do with that weekly chart. You can see this one's pressing down. Potentially we're going to fall short here. We're going to fall short, build a high low, 60.50, maybe under 60.100. If we do that, I'll be out of my short if I'm going to be in anyway. Take the small gain, and up we goes. This is a bit different. This price action is a bit different to what we saw after that first press lower. You can see that couple of green days, and that was a grind. If you go down to the daily, that was a bit of a grind, and we were looking to go short in here, whereas this couple of red candles didn't break that level, and that would have probably been your clear short off a lower high, big stop, a big wide stop, I would like to see this press back up a couple of green candles, build your lower high. But you can see that's different price action. It's a bit more choppy. So I still think the bulls and bears are fighting it out as opposed to this. This is MAs crossed over, retest the MAs, and then sold. Whereas this is on the top side of the MAs. It's still got some work to do. Just a CFD, sell a CFD on this, on the index CFD there, Heidi. You can trade the futures also. Futures are 25 bucks a point if you're happy with that. If you want to do something smaller, just sell the index CFD. But what I tend to do is a bit of a trick is looking at the, on our platform on Trade Direct, we've actually got the index CFD and we've got the SPY futures CFD, which goes point for points. So I'm basically watching the SPY futures. Yeah, Lauren said that SPY futures pockets are deep enough. I would look at the SPY futures levels, not so much the index levels, as on the CFD anyway. This is the index, it's a pure index. You can't trade this index. You can only trade it through a derivative, either the CFD or the futures, or options if you want. But I'll be looking at the SPY futures if I'm trading the CFDs, or just directly trading the SPY futures if you want. Problem is with the SPY futures, unless you do more than one contract, you can't piece it out. For example, if I was looking at it and it pressed into this zone and I was on the CFD, so even if it's 20 bucks a point, you can take off 5. If it keeps going through, you might, it bounces, pulls down a lower high, you take out another 5 and so on. So you can edge out of your position. It still keeps them running. To do that in the futures, you might need 3 or 4 contracts, which costs you about 20 grand in margin. So it's worth thinking about anyway. So what do we got? There is my futures. Well, a bit of a rant on the overall market. Any questions? Otherwise, we'll get into some trades. So, what do we got? You're right, Lawrence. CDA is annoying. It's choppy and it's thin. It's thin on the buy side, which is a shame. But someone keeps hitting the offer, which if it holds up here under today's, I don't mind that. They're not hitting the bid hard. This is CDA. This is what we got coded. We were long. Don't remember now. Where we get long? I'll have to check. Whoops. Here we go. CDA. Long at 319. So we got long with this little push up through this high. It's an inside level, so it's a bit more aggressive trading, but it gives you, I like these inside levels because it's a higher probability it's going to start at least tacking the highs or breaking the highs. So at least you can get something up your sleeve before either you get stopped out, break even or whatever. So I like those inside levels. Yeah, Vin. Yeah, but CDA is a bit thin. It is, I mean, you could probably understand that. There's no one going to want to stand in front of, on the buy side on a day like today, down 75 points in the ASX, which you do expect these smaller ones to thin out on the buy side. But it's a good sign that no one's coming smashing down on the bid heavily and exiting, exiting stage left. So that's the one we got. We got CVM, which we've taken a partial, managed to take a partial on that 46.5, which is good. And I am bit concerned with this one. It's very grindy price action. I was hoping to see something like this, a couple of good green candles really spike up and then look to, take a good partial. But instead we got in and it's just been grindy all the way up. We're in at 43, took a partial at 46.5. So book something there, which is a few 10% or so, 8% on that. But I don't like the fact that it's grindy and the fact that today we're down 3% and you're in this, even though we've got through that level, we haven't finished above that, the high at 47. We touched at 1, 2, 3. So I'm getting a bit concerned in this. I'm even thinking about just closing it, calling it a day at 45 potentially. So we'll see. We'll see on that one. Just here. Don't forget, the pros will close the market. So it's good to see how it closes. If they come in heavy-handed on the sell side, then it might be worth cutting that one. Because it looks like the pros at the end don't want it either. And not willing to buy it into the close, buy it up to say 45.5, 46. They're not going to do that, and they're just letting it sink. Then better off probably being out. Anyway, Wall is good. That's caved in today. Potentially we're going to drop our stop to just above 15 bucks. Can't exactly remember what it was. It was somewhere up here, 15.50. or 33, 15.33 it is. So it's only dropping it, say 10, 20 cents. But that there, if I find this comes back from the sell-off today, I'd rather have a tight stop, especially on the short side. Rather have a tight stop. But the daily looks, you can see that sellers have pressed it down from overbought to oversold. So good selling pressure. It's bounced back into overbought territory, but it's making that lower high. So potentially this is going to confirm. It's going to confirm a lower high once it gets through. Let me just make that a bit thicker. Once it gets through those lows of 1370, say, um, that will confirm that lower high. And that's probably the best time to drop your stop, but I'm willing to do it on a day like today. So you can see this price action has gone sideways. It opened up at 15, bang, finished on its lows Friday, and then today it's got sold down through the previous 1, 2, 3, 4, 5, 6, 7 days. Took out the lows from the previous 7 days, which is pretty weak price action. Now, if it does bounce from here and doesn't take out that low, I would probably, ideally be happy to get out there, because I think if this is weak, it should just keep going. If that overall market finds more weakness too, this thing should keep going. If it doesn't, then you probably get a question why. So that's it. That's Wally. That's going. Newcrest is kicking along nicely. We've raised a stop. It's a Goldie. We should expect to do well. So that's about it from us. Let's get over to looking at something else. All right. So what do we got? What do we got? ADH. That's looking shorts. It is looking weak, all right, but you've got to remember, buyers, stocks are basically biased up, biased up most of the time. So if you're going to take a short, you want to take it in overextended territory, somewhere like we had our Wally entry. It was over somewhere around, I think it was around here. We got short. It might have even been here, 26th of Feb. Let me just see that. Wally, 26th of Feb it was. So we're short on that red candle day. So you can see that was overextended on the daily. And if you go back to the weekly, it was extended up here too. So there's two things working in your favor. The daily is extended. Last time was sort of extended, well, probably on the weekly anyway. It was way up here at 19 bucks to 20 bucks. Then we're extended again, and we're way down at 15 to 15.50. So you've got to think what's happening here. We have this massive run up. So you've got this massive leg up, one leg down, potentially the second leg down, at least attacking 11 bucks. That's the premise for the trade. If we don't and we fall short somewhere at 12.50, so be it. We've made a few bucks on it on the short. But what we're trying to get in, we're getting in at the hardest time. When most people got, if you're long from here, they're going to have sweaty palms around here, because that's what Davin's saying. He'd be proud of me for using that anyway. Sweaty palms when, if you're long, you'll be looking at this going, oh, once we start selling off these couple of days, the start of March, you're going to be concerned. And if you've come back up here, especially today, and if you haven't got out, you're probably going to start to think about exiting, especially if you're sitting in a small gain or even break even. And if you're underwater here, you bought it through 15, you're going to be thinking twice now if you haven't already got out. So this could just wash out that recent bull run. And don't forget this, you got all these buyers positioned up here. A lot of them have been squeezed out. Well, a fair few have been squeezed out on this move down. And if we start getting a bit heavy again, this secondary move could squeeze out a lot more. So there is fuel on the sidelines potentially coming to the market to get out, to sell, and we're short. So you're trying to put yourself in the zone where it's probably going to be the hardest to trade short. And it's the same on the long side. But your price action, you're trying to read your price action. It's showing you the right zone. We've got some lower highs in here, after getting up here, failing, coming up here, failing on these inside levels, probably very aggressive short on the 26th, but that was confirmed later on. With these couple of days sell off, you've got a lower highs coming into play, off an extended zone up here. And the last time, don't forget, with this weekly selling might come into play as well. I think that's what you're seeing today, a bit of a rush for the door, 6 million. What volume we got through today? Oh, not a lot really. But that stochastics, I don't mind when it's starting to roll over here. Pressure's coming down. So there's a few factors for us as why we shorted it here, as opposed to ADH, where you got smack down here, we've got a lower high. It is, and it's in the extended on the downside. So I wouldn't potentially short this, especially after it's sort of the opposite. We've got this big move down, tried to go, and we're starting to come down. So if you short it here, you could just be shorting into some buyers that are going to be stacking up around 165 or even 170, this zone through here. If we go back to the weekly, this move down here is starting to get extended as well. So for me, this is not a high probability short setup, even though that weekly looks relatively the same to Wally, except Wally, for me, Wally's just rolling over. The selling pressure hasn't really started to come in, where this selling pressure has coming in here to drive it down to where it is at the moment. Does that make sense? So it's just not that I use these crossovers or anything on the stochastics, but I use it for more for pressure from buying and selling. When it's oversold down here, there's been some good selling pressure into that level. So what's happening in price action? Okay, it's got smashed. It's rallied up, some good buying pressure. It's took it up to about 210. So you go, okay, good buying pressure, but we couldn't get back up to previous highs. Not a sign of strength. Okay, so maybe here, somewhere up here, there could have been a short. I don't think there was at all. It was more choppy, so nothing really set up on the short side when you're at this zone on the weekly. No, nothing at all. It would have been potentially something through these lows, 18, so 185, 180 even, or 185. So you could have sold it short there, then you're up 10 cents. Great. But at the moment, to sell short might be a bit tough because it's starting to get extended on the daily and the weekly to the downside. So there's selling pressure coming in. But you've got a clear zone through here, 165 to 170, which we're coming into, which buyers have bought it up previously, pressed it up. It's coming in. Maybe we fall short. They start to step in at 175. Don't know. Just see what these volume. Where am I? Where's my volume gone? My volume's disappeared. All right, indicators, volume. I like colored volume. All right, so there's not much volume coming in here. But anyway, does that make sense, Lauren? Well, I probably wouldn't. I'll probably be steering clear of that short, especially now because it's more of the you're going to be selling into the known, not the unknown, and you want to be selling into the unknown. So when you're first in, it starts getting picking up a bit of pace on the downside. That's where you're going to get put into profits pretty much straight away. It is going to be a harder time to sell, but if you've got your price action all nutted out and you know what you're looking for off lower highs, signs of weakness, then you want to be one of those first ones to sell rather than when it becomes a known, and go with the herd and selling straight into the buyers. You might get trapped into a short, squeeze back out again. Um, Not saying, in saying all that, it's probably going to go down now and you'll be laughing at me. So Flight Center, for me, I wouldn't short that either just yet. I think, you've got a zone through here off extended to the downside. Yeah, there's a bit of volume coming here. It is, it's coming down. There's no doubt about that. I don't know what the fundamentals are like. If Paul's on, he might be able to say it's rubbish, so it could be a good short. If anyone does know. But either way, that for me, I think that's a bit late into the game to sell it. If we got a short up here, which probably you could have shorted in here, that's your initial press down. That's caught a lot of people. Your first reaction back up. You're trying to sell into your first reaction back up, which was in here. And potentially you could have shorted it there and ride it down. You might still be riding. You probably closed it. So if you shorted it here and you're looking to close, you would probably closed it. Then why would you want to short it now? Because you're going to be late to the game or late to the party. So you're trying to, let me just show you what I'm talking about. You can hear the rain, it's thundering down in here. Let me close that. I want to open it up. So on the short side, and it's essentially the same, go away, on the buy side. Say if we've had a good run up, take that off. So we've had the bulls, we run up, holding levels. So that's your good, whoopsie daisy. This is a run up we're looking at. So don't forget, buyers have bought it up. There's a lot of fuel in that market to potentially roll over and get squeezed out of market. Because if you bought it here, here, or here, you don't want to give up your gains. Okay, so anywhere you bought it there, you're sitting on a profit at this stage. And it doesn't matter what to me, this is why psychology is the biggest thing with trading. It's not what's happening here, there, or anywhere. There's going to be fundamental traders and technical traders are both sitting there looking at this going, hey, and it's like I'm sitting on a nice healthy profit. Whether they think it's overvalued or still fair valued or still undervalued, I don't know, but they're sitting on a handy profit. And if this starts to crack, then my theory, anyway, my theory behind trading is that it doesn't matter what everything's saying. People don't want to give up gains, and we're all guilty of it. Closing early, I've done it a few times, quite a few times in the past, even recently on APT, and I think SLR was another one we closed. It's gone a bit higher um, because you don't want to see those gains disappear. So if you're looking at that, that's sort of the, I guess, the theory behind the market rolling over. So if we're looking at that, and then all of a sudden we start to see these cracks appearing, and you get lower highs coming into play, that could be a lower high, and it's not confirmed, but we want to front run it. We want to potentially try to front run a break there and front run these guys, and that's the first sign of weakness that's coming in. By the time you get down to here, it's there's a bit more information known. And if your stochastics are down at sort of oversold territory, do you really want to be selling there when that's becoming more of the known? Yeah, it could keep going, or we could just keep holding up here and start to bang. And that's your 1, 2 moves down. We start to rally and bang up we go because we haven't, we may not have broken the anchor. There could be a number of reasons for that. But this is ideally what we're looking for. We're trying to sell it when it's hardest, and it's going to be easiest for people to start to get out of longs. Does that make sense? So that's what we're looking for. And that's going to give you best payouts and also probably going to give you the smallest risk as well. Whereas risk here could be a lot higher because it becomes a known. People chase it for the door. You've got potentially selling on the breakdown through here with your stop a lot higher into an extended down move. A lot of these buyers have already been squeezed out of the market. They've been given a heads up that things are not good. They're probably out. There might be some baggies or bag holders that don't want to get out yet, and they're going to start to get squeezed out. But you're always going to look to see how many people are potentially still long that have to get out. Is that going to be enough to make this a good high probability trade? Or is it potentially started to turn to become a low probability trade? And when you're selling it here, potentially you're going to be buying it back in here um, and buying it back to potentially the next wave of short selling. So it's all about, moves up and down pretty much. For me, it's psychology, it's fuel to a move. We're trying to look to see what's happening between buyers and sellers, the reaction, supply demand pretty much. Um, is there more supply that can come in? If there is here, great. You might want to sell it if you can get an inside level. Um, and if you think there's a lot more fuel to go down, okay, by all means, sell it. That's great. But if you don't, if you think that this is taking out a lot of fuel, this move down is taking out a lot of fuel on the downside, then is it high probability? Probably not. Can you find something better? Probably yes. All right. Bit of a rant there. Let's look at ACC. Yeah, it could be something similar. You can see it's been in a downtrend. I mean, this is just a continuation trade. You want tight risk on these sorts of things. In the way of the weekly chart, it's been going down since 2016. Down, up, down, up, down. How much more on the short side's left in this? You've got to ask yourself, even longer term, maybe not much. You've really got to look for a reason this to be fundamentally a rubbish stock because you want it to go a lot lower. So is it worth throwing your money at? Maybe not. Righty. What else we got? Who was CDA? There was one other. Oh, MNY, Peter. So is this? You can see this has had a good run out. So we're looking. We're on the. We're not. We're even on the daily. We've had a good push up here. Okay, so over the period of a few years, good year, good rally, got to the high, started failing. We saw that got smashed, and that probably got more smashed because the overall market did. And you can see what I'm talking about when there's fuel ready to come out. Everyone's been positioned long, and they're long for a while. They're really looking to any first on a weakness, bang, out, book your profits, call it a day, and you look for specific weakness, and that's probably that coupled with everyone's positioned long here. We've had a good rally up here, squeeze out, good rally up here. Everyone's been positioned long again, up about this stage. Overall market tips over, bang, everyone bails, and you can see that a couple of weeks just straight down. Really here, you probably could, if you did hold it here, you're probably on this break of, what's that low of 190, you bailed. And then you've got that secondary move down. This is on the daily 1, 2 moves down. And then we started seeing any sort of sell-off was getting soaked up again, soaked up here, and started holding some inside some higher levels after this retest of 150. Good sign for the bulls, bad sign for the bears. If you were selling, if you're holding it um, longer term, back to this weekly chart, if you're holding it from in here somewhere, whether you're up, down, or break even, if you're holding it here, that's a good, probably over 50% retracement of this leg up with just that one foul swoop, bang down to 150. You can probably guess that. $1.20 up to $2.30. That's probably more like a 60 or 70% retracement of that move up. Cleaned out a lot of traders. So if you were holding it, this is going to give you some comfort. If you were short, you're going to want to probably get out at this stage if you haven't already. And if you're a new buyer, you're looking for that good correction. Like I said, 70% on the weekly, and you're looking for that potential to buy. You're buying off your high lows, and you've taken this rally up. Okay. Now at this stage, we're struggling. We're struggling to continue. You've got this big, opened up, pressed up in the same day, all the way back down. So we rejected those highs through 210. Next few days, we've pressed up and we've rejected below 210 before we started getting a bit of selling over the next couple of days. So here, you're probably wanting to question this overall run up. You probably want to be concerned. Anyone that's bought it here, and if you've been a bit of a baggie from this run up, you're going to be concerned as well. And you're going to look, I've weathered this storm, I'm potentially back into profits. Maybe I want to jump back out. I'm going to call it a day. This is annoying me. I've held it for a good part of a year, a couple of years now. Bail, get out, call it a day. So that's potentially what you're looking at this moment. Big sell off a few days ago. Well, what was that? Into the start of March, big sell off. Tried to rebound, and that was just that bargain hunting potentially. And now we're getting some weakness coming back into. So this potentially is a lower high, potential major lower high in the weekly up here at 210. So you get a few things coupled where it could easily roll over. Does that make sense? Weekly coming off that overextended up here. So the weekly could even go to oversold territory down here. We could just blast through $1.50. We don't know. But looking at the daily, I don't like sort of this sharp. I want to see, ideally for me, I want to see, just draw it here. So this is the leg up. That's your leg down. So we've got this support zone through here. Leg up, leg down. That's your support zone. We've reacted off there and we're now down. I wouldn't mind ideally seeing, just a bit more contraction. I want to see that a few more days with some sellers coming in. And then I think you're going to get a nice little entry, potentially short, as long as you break that these lows just below 180. As long as you break that, if you don't, and you start reacting up, bang, I would be out. On the short side anyway. On the long side, you can get this. It could just basically go that way. Then you've got this high low holding. It's contracted in. Buyers are supporting it above 180, potentially here, and then bang, if you get long there, you've got minimal stops, and you're looking for that to press back up to at least 210. So at the moment, I would want to see a bit more price action, and that's potentially because we've got that little push up there a few days ago. For me, I'm not convinced either way just yet. This could easily be a bit of a washout, contract, hold. I think it's got to do a fair bit of work to hold that inside level, and then you could go long with a break up through the previous lower high, or this gets squeezed and then you go through the previous higher low, go short. Does that make sense here, guys? What were you looking at on that one there? Who was that? Peter. Looking good until today. Yeah, look, it potentially was looking good, but this could still be. Don't forget these sorts of days here. There's going to be an open. There's going to be a sell-off because everyone's the end of the world. End of the world's coming. All they're going to get is suckered in, potentially squeezed out, and this market turn and it just turns around and heads higher again. And the pros will know you're not going to sell on the open because, especially when they've had 2 days for everyone that's concerned, all your sort of retail investors are going to be concerned. 2 days look at the market. The Dow's down 400, probably quite a bit down 400, and then what am I looking at there? Sorry, I just started reading the comment. They're going to be having 2 days to stew on it. They're going to be feeling scared, nervousness. They know the market's going to open weak. They sell on the open, get out, and then all of a sudden we pause, turn our head straight back up again. This could easily happen on this. It hasn't broken a key level, hasn't broken through that 180 just yet. So I wouldn't sell it here. And if we do break through, okay, I'll just leave it, walk away, forget about it. If I was long, I'd be concerned if I would have my stop straight under that one, about 175. If I was long, and depending on where I'm long from, whether it's going to be profitable or not, potentially if it was here, um, if I wanted to get long, I'd still be waiting. I'd just be waiting because I think this could cause a bit of angst between buyers and sellers. Um, Buyers might be, anyone that's bought it here these few days or bought it late into the trend, potentially hasn't been squeezed out, could be getting nervous. Buyers start to soak it up and off she goes. You don't know. So we'll just hang in there at the moment. One to keep an eye on though, anyway, Money 3, very low volume today too. So that press down has been on low volume, and that's just your bids, just people pulling the bids. If you had a bid in there at one, come into the day around 190, you just pull your bid, or 185, you probably pulled your bid. So that's why a thin market can easily get pressed lower, and it could be done on purpose too. Press it lower, soak it up down here. Nervousness comes into the market because of the price action. They soak it up, bang, up she goes. So that one's there. MSB. This one is not so bad. I was looking at who got this one, Vin. I was actually looking at this a bit earlier too. Just watching that price action. Look at the weekly. It's off a key level around $1, basically that dollar even. We are on the weekly. It is a bit concerning the fact that we're, pressed up, pulled back, couldn't get through $1 here, took out that most recent high low. It's pretty much a washout. Straight back down again, and then we did the same thing here. Pressed up, cleaned out. It would have stuck it in a few buys. That's pretty much trapping some buyers. Turn around and squeeze them back out. So potentially we could be doing that on the weekly over the longer term. And it's just going to sucker in a few buys up here and then turn around and squeeze them out and run through $1. You have to be concerned. But looking at that weekly chart, sorry, this daily chart now, we are pressed down to 10. We're coming off, and this is the key really for any longs. Before that, we really just pressed down the lows, pushed up, high low here on the longer term, started to go up, and then fell out, but we haven't retested a key zone. This we've retested, and the bears have failed off $1, failed to press it through $1, probably a second or third time. A lot of time down here, they failed. So really, this could be, if you were bearish on this and you had a short position for whatever reason, you might be thinking twice because it's reacted back up off $1, could start to hold some higher lows and could continue just to press up through $2. You don't know. All right, so this weakness in here failed, bought up off $1, pressed down, tried to go again, spent a lot of time through here, $1.15, say, doing nothing. And now we're starting to accelerate back up again, potentially accelerate back up. So this could easily be, I would have low risk on that. I don't know if I'd probably buy it through this green candle. What's that high 140? Potentially buy it through 140. It touched on 140 today, so 144, 145. Just give yourself a bit of room where you stopped out at 130, for instance. And you're gunning, you pretty much have to see it in one foul swoop. You'd want to see it straight through $1.50, these previous highs. If it doesn't, you might want to bail because it could get choppy, or you could be that fodder for that move down again. So just be careful there. Anyway, it's this price action that I like, and the fact that we've got that retested $1. We'll look at GPT. We'll do. Now, what do we got? Flow. Is that a US stock again, Shirley? FLO. Yep. Let's take a look. Oh, I don't want that, do I? Is that Flowers Food stock or what? No, what US? Oh, yeah, it's gonna be that one, I'm guessing. 21 with the stop loss of $1. Oh, sorry, I thought you were a $20 stop loss. It's a $1 stop loss down at 20. All right, breakthrough 21 through the previous high. Stop at say 20. Well, it's going to get you below that high low. That's good. I don't see any reason. It's kind of good. Accelerate up. I'd like to see this price action, chop around here for a few days, but at a higher level, and then I think they need to give you a tight stop loss. If I was going to buy this, I ideally would have liked to have bought it through, a few days ago if you didn't already. Sort of through that 2050, 2060 zone, even on, what's that, Thursday? and then had a nice tight stop loss. You got a tighter stop loss, you're in profits at the moment. But yeah, I think if it chops around here, a few negative days and it starts to hold a high low in the face of some negativity in the US, then yeah, it could look good. The longer term chart, it's actually not looking too bad at all. Longer term, you can see this is what I'm always looking at. That's contraction, contraction lower. It's broken out of contraction, so this would probably be, longer term. Whoops, if I can get that out of there. Well, let's just take this. Longer term, you could easily have. I'm not very good at this, by the way, guys. Break out that high. Oh God, why does it go away? Escape there. Oh, we don't want that. All right, let's try that again. Buy there. You're gonna stop below. Below. Oh, come on. All right. That took a while to draw those in. But anyway, press up here, pull back. You got your high low, but the one thing I don't like is the fact that it's pressed up into this high. It's extended into that high too. I'm just noticing it's extended up here. So you got to ask yourself, are we just going to retest it? Is it just going to start holding a high level? I never like things to extend into a level and then buy it. I would rather see it press and buy it into expansion. At the moment, this has just expanded for a few days. It's expanded up into these highs. For me, the stop would have to be below, around 20, like you've got it. But I'd ideally like to see. Well, let's just draw it on here. I find this always a lot easier. I'd ideally like to see this top of price action hold a higher level and buy it off inside level there, minimize your stop. And I think that would lead to a press straight up and through highs because of this longer term structure. Looks really good too anyway. There's a lot to think on that. Astrology. A bit of banter going on here. All right, what else we got? Good work, Peter. Now, so I'm just reading through the comments now. Give me a giggle. If you're not scared, GPT will do that. Scared will do it. Go. All right, great. Let's just look at this one here. All right, we'll get into GPT. So daily, that's heading higher, and this actually doesn't look too bad at all. Be tough, and this is a daily continuation. If you look at the weekly trend, it's getting a bit extended up here, and you can see by the MAs, it doesn't mean it can't get more extended, and you can at least get a few, you could get 50, 60 cents out of that. So what do we got? Say you bought it at 620 up to 650. What's that? 30 divided by 6, what did I say, 620? It's still a 4 or 5% trade, if that's the case, if it gets further extended. And this is, I'm only looking at this weekly chart at the moment. You've had a good press up, pullbacks. This move down here, this is back in 2016, clean out a few traders. It's gone sideways, chopped sideways. If you bought it nice and early in that trend, somewhere at the start of the year even, that would have been great. If you're looking at buying it here, the weekly's up. Your weekly level's at 580. If you can just go right in here, 580, you can see that's holding that trend up. So that's your latest bout of expansion up to 630. Then we're backing off. So we're sort of contracting off that 630 at the moment. So on your weekly, if it breaks 580, I would be forgetting about it. The fact that it hasn't, it's still holding. So you're going to go into your daily charts to see what's happening. Actually doesn't look too bad on the daily either. Just best fit that, probably make it a bit smaller. And you can see where, for me, the volume at pressed higher, you got big volume on that red candle there. Volume was kind of consistent there. And as we pull back to the MAs, it's easing off. You can see even today, lower volume. And also, stochastics have gone from overbought to oversold. Last time we we're sort of in the oversold, we were down at 580, and before that, we're down at sort of 530. So that's saying that every time it's pressed down, it's getting soaked up. We're making new highs, and it's just coming into that higher low zone as we get to sort of oversold. So the sellers have tried to press it down from 630. Buyers are soaking up at higher levels. They're happy to soak it up. So all that pressure, they're soaking it up. All right. So if this is just going to bounce off these MAs, which it could just about be doing, If you're long, I'd be confident with this one. If you're going to go long, yeah, and you can see, look at that. So potentially, if we can get what I'd always look for, we've got, so this is your leg up, 1, 2. So at the moment we've got this structure, 1, 2, and we've just popped up. What I'd be looking at if I was going to go long is just something obviously off a higher low. And I like that, minimize my risk, and then look for a press up through 630, and away we go. And then just following it from there and see if we get this that something like that up here could easily go to 650, 660 even, and look for that big blow off. If we get a big blow off at the highs, I'd probably be just bailing on that. But I'd look for that as a shorter term trade. I wouldn't be looking to buy that in the daily, looking for some massive gains, $1 or $2 even, because of where the weekly is. And I think the weekly potentially, this run up here needs to correct itself a bit. Whether it's going to be like this straight down, who knows? But I think if it's starting to get a bit long in the tooth, but either way, that daily is worth a trade. Have you got that, Ola? We'll do MPL. If you have, yeah, I don't know where you got it from, or if you have, where you're long from, where your stops are, but I'm biased to the upside on this one. I think it's looking quite good. I mean, ideally, it's looking ideal. Pull back to the MAs, good pressure to push it down, but it's at a higher level. So generally, when it gets to oversold, you look like that. To me, is the sellers run out of steam. If it's at a higher level, with regards to your chart to price action, it's just showing your strength, showing a really good sign of strength. So what's the last one? We'll get over MPL. Oh, PML. It's not even much. It is MPL. Bobby. So for me, the daily is not saying too much, but we'll go to the weekly. And the weekly's not looking so crash hot. All right, let's just draw this up first so you can get an overall picture, potentially what's happening. So you got the highs up here, right? Or even the zone, if you want to call it that. Zone up here, pressed up, pull back. Okay, we've had this good corrective action. Started to press up, and it took all this while to get back up. Couldn't get through. So okay, if you can't get through that second time, you got to pull back and build a higher low. It's a good little corrective action. So that's your structure there. Pull back, inside level, pressed up. Fell short here, and then just crumbled. So as soon as you fall short, say for a third time, at a key zone, there's some potentially more sellers to come in. I really wanted to bail out there at 330, and then we got this, especially this is a weekly, this big red candle. If I could take that, this big red candle here, what we're looking at. Press down, that's wiped out a few. So that's pretty much sealed the deal on the long side for me. I would be out. I'd be wanting to bail on that. And I'd probably look at my daily charts to, especially as we come up here, if I'm long, I'll be looking at my daily to really tighten up the risk. I don't want a piece of it, especially because I'm looking at what could potentially happen. And the risk is if it comes up into that zone for a third time and it starts looking weak, I want out. I don't want out because it's the third time it's touching it. You don't know where it's going to lead to. And of course, we know now that that's led to a big sell-off, push down through these lows, retested. We've got this little bounce, but the fact that it's washed out the previous lows, I'll be a bit more accurate with that. Let's just clean up that chart. The fact that it's got through those lows, it's sort of pressed through the lows and pushed back up, and now we're sort of gone back to overbought. Sorry, in that overbought territory up here. Last time we were right up at 330. I'm thinking this could be a bit of weakness in that, but I don't think it's played out just yet. I want to see off the weekly chart potentially a little pop and that lower high again from the weekly, but if I was going to get short, and I'll probably be biased short on this one just at this stage. So if we go down to the daily, I wouldn't be selling it because the daily's pressed down. We're getting overextended on the downside. So it's sort of showing a few conflicting scenarios. And if you do, and this is why I'm biased short, and I would be looking for that weekly lower high, is because of this. So that's a big weekly leg, Potentially we're looking for another one down. And here you've got some lows broken. Potentially you could have got short in here somewhere or even in here. But ideally, I'd like to see this. I'll draw that in a different color. This hold, and I wouldn't mind seeing it pop up, another lower high, and then look for a short opportunity because this leg's potentially failing. We've got correction. We don't know if it's going to go to here. If the overall market caves in, we know that's going to come down. Potentially, we come back up to the 50% on the stochastics, showing a bit of buying pressure. We get that lower high, and then the sellers come back in, and we're looking to entry on short side because of all this price action, the weekly and the daily together, and get the weekly's heading south, get the daily on my side as well, which I don't think the daily is just on my side just yet. You can see that volume is easing a bit as well as it's heading down. So the buyer's not willing to step in front of it, and the seller's not too convinced just yet that this is a big, rollover of any sort. Does that make sense? 610, what was that at? GPT, let's just have a look at that again. Good. Where's your stop? 610. All right. We'll probably call it a day there, guys. I might have to miss a few. Sorry, Shirley. We've got the bulk of it done. So anyway, hope you can join us next Monday. Hope there's a bit better price action. What are we now? Down 61.20. So we're hovering down these lows. Let's just see what the SPY's doing. So this is what I'm keeping an eye on at the moment. It's your 30-minute chart on the ASX. Sorry, on the SPY futures. When this starts to fail on the downside and starts to hold a higher level, especially for next hour or so, if it can come into the close, then yeah, doesn't look like it could do. We might just get a pop up into the close, and this is your key level at 61.56 for this leg down. If we do pop up, for instance, if anyone that's going to watch it, so we pop up from here and get a bit of weakness over the night, and we do this, then yeah, all hell could break loose again tomorrow. And it tends to do it quite a bit. Let's get rid of that one. If that's what happens on the 30-minute chart as well. This could happen overnight, and we start to potentially hold a lower high overnight coming into the close, well, early hours of tomorrow morning. Then we open up and bang, straight down again. We don't know. But yeah, we'll keep an eye on this one here. This is a SPY. Looking like it's getting extended. You can see down here. Buyers, probably not potentially new buyers are stepping in, but sellers of this leg down are potentially closing out, easing out, booking their gains for the day. All right, guys. Thank you very much. Like I say, I hope you had a great day. Well, as best you can, considering what the market's doing. Hopefully, we get a bit of a bounce tonight in the US, which don't ever rule that out. But yeah, just make sure if you're gonna, for the week, if you're up, going long, short, you've got a plan. Know exactly what your plan is and trade your plan. Don't trade what the news is saying. News attender don't know anything about trade, to be honest. I'm very negative about it. When the news says go down, I'm looking for a buy. It says go up, I'm looking for a sell. So anyway, thanks very much, guys, for joining us. We'll see you next Monday. Have a great day. Bye.